Wow, it's been 1 year since I started the Crypto Market Wizards podcast, and I've had the most inspiring conversations with some of the most successful people in crypto. To celebrate, I wanted to look backwards and highlight the most actionable and epiphany inducing moments that have helped me grow as an investor. So without further ado, I'm Taiki Maeda, and here are my favorite clips of Crypto Market Wizards that have changed my life. I hope you enjoy it, and if you do, try to keep the alpha for yourself. How do you build like longer term theses? So for example, you're a big Solana guy, and you were talking about it, way before, even post FTX, talking about it before everyone else. And now it seems more mainstream / consensus. How do you build like conviction, and how do you know when you're wrong versus like when you're right?
I think for figuring out when you're wrong is the hardest part. It can be a
Yeah.
time sink. But I mean, my conviction in Solana was a combination of things. I've been following Solana for a long time, like since early 2021. So I had seen the issues the network had with its downtime. I'd seen how little applications were on it in 2021, and then I saw basically the growth of Solana and all these new teams building on it. I saw the upgrades they made to mainnet in 2022. And then I was at Breakpoint in late 2022 and was just talking to teams there. Kind of like being on the ground, getting that experience and insight directly from people was big for me. So I knew that FTX and Sam wasn't really at the forefront of everybody's minds who was building on Solana. And I knew that on the technical side, they'd fixed a lot of the issues that were plaguing the chain previously. So it was a combination of those things. As far as how I know, and then like I guess it's a combination with thinking through what crypto is going to look like in 10 years rather than what crypto looks like right now. So if you just take crypto in 2023, there's not that many daily active users using all these protocols, maybe like whatever. I mean, probably less than 50K for most of DeFi stuff, if that. But if you're thinking about the future and you think crypto is going to be competitive with all these Web2 behemoths, you think millions of people are going to be actively using these protocols like daily, then your outlook on what applications and what blockchains make the most sense in those scenarios looks different than somebody who's purely thinking about present day. And that's what I think about a lot because I'm a super long-term bull on crypto. If you look at any these trends where we've had a ton of innovation historically, it's not always the first winner that wins out long term. We have stuff like in early 2000s, what was like Yahoo versus Google. It was like one big one. It'd be like Apple versus Microsoft, like all those different things where it wasn't clear at the beginning what was going to make the most sense. Like if you go and read back articles on the iPhone and like the Mac, there's a ton of people who are like, this makes no sense. Like it's not going to work long term. And like may have been consensus at the time that was the truth. So it's not always the case that what the consensus idea is on some new innovative technology is right. And you kind of have to have that thought process when you're thinking about longer term investments, I think just generally in tech. So it's kind of where I was coming from thinking through it. But as far as figuring out when you're wrong, there's a few different things. For Solana specifically, it would be, I guess, like negative for my thesis if the chain continued to have issues with downtime. So it's been up right now for the past like 10 months straight, I think, with no real issues. But if it did start to have issues, even after all the fixes it pushed in 2022, then I might need to reevaluate the thesis and see where I could be wrong or how they respond to those things. And then also just like price wise, if the market is not reflecting what your bullish theses are, then it may be time to reevaluate.
Like how do you think about like various echo chambers in crypto, and how do you not fall into the trap of being in these echo chambers?
I think the echo chambers happen when the price goes up. Honestly, dude, like you have those echo chambers form around Bitcoin. It's first like in its early days, and everybody was so confirmed by price going up in their idea that they were like, "Oh, I'm up this much XYZ. I was clearly right. Nothing else is it can be as right or is comparable. And a lot of the early Bitcoin guys were the same way against ETH. When ETH came out, they're like, yo, the ETH is a waste of time. Blah, 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 why do we need this? In the same way that a lot of the ETH guys, they heard that from all the Bitcoin people. So they had that situation where a ton of people were shitting on them, telling them what they were building on wasn't like valuable for the future. And then they were right, and price went up a ton, and they were successful. And now they have that same setup where it's like we were confirmed right in our thesis in a massive way, and this aligns with our like not only values, maybe ideological values, but also like we have money invested into this. And so it's like you typically align with where your bags are. Like a lot of people who have a ton of venture dollars or retail have a ton of ETH. They obviously are less likely to think through other theses on why they might be wrong. So I think it's just like it's an effect of markets, dude. But it does happen a lot more aggressively in crypto. I think the cults form crazy. Like, bro, even Hex has a cult.
What do you think about like these valuation models? Like, what gives L1s, L2s value? I mean, what gives any token value? How do you think about valuations?
You just move them based on like how many people even know about it and how many people give a shit and pay attention to it. That's pretty much it. And then it's like something I learned from behavior psych is we always need to have a reason for something. Apparently, right? Yeah. So every decision we make, there's either a more like fact, concrete reason, or there is a more like social reason. So the fact reason would be like, hey, you know, we are ABC Capital. We took your investor money and we bought Apple shares, and here's our reason. Like they make a reason for why they bought Apple shares, right? And then they're like, oh, the revenue is this. Their gross projections that like it's amazing. Like the earning to whatever price, you know, ratio is great. We're gonna hold this position, and then like that kind of is like a cult actually. Like yeah, there is real money. Like at some point it's like too cheap, but like obviously like if it's trading at like 50, 100, like it's pretty much like a game, right? So it's like even if it goes underwater, I feel like a lot of these funds are like kind of just become a cult. They're like, oh no, we still believe in this. It's like their Bible, right? It's like, oh no, we believe in it, and then the P is good, trust, and then it's like they just keep holding it. It's like, yo, what the fuck? Like, and it's kind of the same. Like, and here's like, and the more social part of reasoning would be like, hey, you have an iPhone, yeah, like, you know, the tech is amazing. Like we got this feature, that feature. Like, yeah, iPhones are the best. You know, it's just amazing. And then it's like, if you actually look through what they do with their phones, like they actually never use 90% of the quote unquote tech they just mentioned. And then it's like, okay, are you really buying this for the tech, or you just like say something because that's socially acceptable to own an iPhone and socially acceptable to say why an iPhone is superior, right? So it's like that's the two main reasoning we give ourselves for our intentions. And it's very much the same. It's like here where it's like the people make up some whatever metric and be like, yo, this is why this is valued at this, and why it's like gonna go up or down, or like, yo, GCR bought, so you know it's now fashionable for me to own a position. It's like, oh, Kobe's in too, yeah. So you know, I'm in the trend. This is the new the Balenciaga of the coin to hold for this week, right? So it's like it's very similar in that. And especially if you're in like a Discord group and everyone apes a shitcoin, like you kind of know, like you're probably about to ape that thing, right? So it's yeah, it's just like overall, it's just like how many people know about it and how many people really care about it in a sense that give valuation to these tokens. And like attention is really important now because like you could quote unquote have like amazing tech, like, but if no one talks about it, like no one like cares, like even heard about it, like how are they gonna buy this coin, right? Like they can't. So we've reached a point of where, in my opinion, social media is kind of like the fundamentals, or like we're getting more and more to that point. And then it's like some people may be like, yo, some protocols actually make money, yo. What do you mean? And then it's like, yeah, Well, if no one talks about this on social media, then it never made money, dude. Because people won't hear about it, then they're not gonna buy it. But if everyone shows like, oh, this protocol makes money, even if it's not a lot, the token's probably gonna go up, right? So yeah, it's very much just getting to a point of just hyper influencer like social media-ish market. Yeah, I would say.
Yeah.
And I think like GME was actually just like the start of like all of this for TradFi. Like I think like even like common stocks like in yeah, definitely maybe not like the major like stocks, but like the mid caps and some small caps are definitely going to be moved um by like a lot of retail in the future too. Yeah.
Yeah, it's like if a tree falls in the middle of the forest and no one's there to hear it, like did it really make a noise? Right? If a protocol has
Yeah.
good fundamentals, but no one knows about it, no one's shilling it, like is it actually good?
And is it true that, because of your, I guess, ad marketing background, you sometimes run Google ads to determine which coins have the most amount of attention? And if you see like an inflow of, I guess, clicks, you're like, okay, I'm going to long this coin. Is that something that you incorporate to your trading style?
Absolutely. A lot of different ads, everything from, content farms to option calculators are part of the process. Data collection is a huge part of the process. When you're dealing with assets that don't trade on valuation, you need to be very privy to the amount of engagement they're generating and the strength of that engagement. And Google's definitely part of that. Google is, I think, the best ad platform, the only one that really converts for low intention keywords, right? So I think it's definitely a core part of my process and will remain so for the foreseeable future.
Nice. Like, do you have an example of a trade that you took, let's say in the past couple of months?
AI crypto, I guess if we're to zone into that, WorldCoin had fantastic advertising performance. And the reason was because Sam Altman indexes so strongly on the AI keyword. So AI typically is dominated in terms of investor interest by companies like NVIDIA, right? And as we all know, NVIDIA and Tesla at times trade more than the entire S&P 500 ETF. And what happened after Sam Altman's drama with OpenAI was that Sam Altman became a sort of main character in terms of the zeitgeist of AI, even more so than he was before. And so if a user saw a WorldCoin advertisement after that saga and they saw that Sam Altman was associated, they would immediately convert. And WorldCoin has echoed the same thing, right? In terms of their team talking about, wow, there's suddenly all this crazy interest, and you see any interview with the WorldCoin founder and he's always mentioning Sam Altman, right? Because even though Sam is tangentially engaged in WorldCoin, it does not matter. Sam is driving all the clicks for that protocol. And, in the specific case of WorldCoin, it had a very high buying intention associated with it. People, and we've seen that in the last, there was an initial run up, when it ran up to 475. And then after the Sora sort of AI launch, obviously we've gone parabolic. I think it has nothing to do with WorldCoin and everything to do with, NVIDIA earnings and just the amount of sheer traffic related to artificial intelligence and people just imagining and starting to learn about their story and zooming out. I wrote a piece about the markets generally being rigged. We haven't really talked about that in terms of the data tracking, but data tracking is what I view as a necessary element to essentially figure out how a rigging is manifesting in market excess. Because when I say something is rigged, it means that some actor, whether it's a government or someone pumping a token, or whether it's a company executing a share buyback, or it's OPEC changing the price of oil, someone has decided that a price needs to move a certain way, right? They decide that oil can't drop below this price. They decide that carbon credits need to be a certain price. They decide that the interest rate of Japan needs to be at zero. It doesn't matter if nobody wants to hold the debt. We'll buy as much as we possibly can, right? So there's someone doing a non-fundamental action, and that always creates excess. So before putting on any sort of data tracking, before running an advertising campaign, before creating any sort of analysis, I always look for somebody who has put their thumb on the scale. In the case of AI, it was the CHIPS Act, and basically every nation state heavily ensuring that their chip supply chains were going to receive unlimited government funding, even though the equity valuations were through the roof, right? So it can be fiscal. Most of the time, it's monetary.
Are there other instances of crypto where, okay, like this thing is rigged?
Tron is, basically, so it's interesting when you like study incentives, right? So you look at a protocol like Tron, their goal of engaging in that market, same thing with Binance, their goal of engaging in that market is to increase the price of Tron, increase the price of BNB, because they're aligned with the holders of the token. If you look at the XRP, for example, it's the opposite. Their goal, the Ripple Foundation's objective is to maximize shareholder value for Ripple Corporation, not XRP token holders. So in a way, if you were to point towards the canonical kind of rigged cross in crypto, it's TRX versus XRP, right? Because, Tron is a small, illiquid cartel that exhibits price manipulation patterns, that has huge financial backing via Tether and the fees that Tether emits in subsidizing the Tron blockchain. And then, similarly, XRP has this massive foundation sale. And, one thing that's been very clear if you study the history of XRP is it's actually quite bullish when the foundation or the executives of the company are blocked from selling by the SEC. This resulted in some of the largest XRP up moves because you remove a steady drip of downwards price action executed by the XRP Foundation. So, if you're like, what's a quant strategy in crypto, which is two rigged markets which correlate with each other but are going in opposite directions, which is obviously very interesting. TRX versus XRP would be the canonical trade.
If you could go back in time and give advice to your younger self, what would it be?
This is an interesting one. It's, back when I left Palantir to actually run my friend's dad's money. And I had a lot of really cool strategies. I had a lot of these ideas already in place. And I made a bunch and then I had a big drawdown. And instead of trusting or evaluating the process, I was like, I need to learn more about equities. I need to learn more about, I need to be an institutional guy. I need to go to a hedge fund and build my ego back up after this drawdown, right? And I think we live in a society where a lot of advice is to sort of generalize, build your credibility, pound your chest, be like, I'm a hedge fund bro, et cetera, et cetera. When in reality, what I needed to do was I needed to look at my positions and say, okay, I was running a 7x7 portfolio and I had a 20% concentrated short position in a basically the equivalent of a shitcoin, and it pumped. And I should have expected that statistically, and I didn't. So really the solution wasn't to go to a hedge fund or make yourself feel better or get, approval from authority. The advice I give to my younger self is, when you encounter setbacks, understand exactly why you encounter that setback, dig into it, learn from it, and keep going. Don't give up. Be detail focused. Don't suddenly zoom out, focus on the macro and ask for somebody else's validation. Like, take the pain and keep doing it. Because in hindsight, if I kept doing that, I would have made more money than starting a company, more money than working at a hedge fund, all these things, because that strategy has performed fantastically in hindsight. So I think that is what I'd say is just don't give up, because you need to trust in process, not trust in yourself.
I do want to talk about my greatest fear this cycle, actually. And this kind of relates to what we just talked about. But literally my greatest fear this cycle is that I'm simply not stupid enough. Because last cycle, I think September of 2021, I just bridged to Harmony. I joined the DeFi Kingdoms Discord and I asked them, hey, are you going to rug me? And they told me, oh, like, Taiki, we are not going to rug you. And I'm like, okay, then I bought it. So obviously, like, I do want to make money this cycle. I mean, I am making money this cycle. I'm obviously underperforming like the apes. But I feel like I can never get there again, Like, I just know too much. I have PTSD. I'm slightly more cynical about the space. And I just feel like I might end up just buying boomer coins that just maybe go up 3x and it's like it's over. Like,
So
how do you think about this? Like, how do you get over this mid-curve boomer mentality, do you think?
It's interesting because, as you said, I'm a second cycler similar to yourself, and I found that over the bear market, I have instinctively become a lot more conservative as an investor. Um, and I think that's just as a function of it allows me to survive, right? And now in this euphoric stage or accelerative stage of the cycle, I do agree that I share a lot of sentiments where I'm in positions that, either the institutions are not buying or retail is not buying, and I feel like I'm, coping on the sidelines or like coping in bags that are not bumping a lot. I think that there are two things to keep in mind here. I think the first one is a very old adage from our dear legendary trader GCR. And he says something along the lines of, he who chases two rabbits will catch none. And so I think you just have to have a very clear idea of what you want to denominate in for the cycle, and then stick to that game plan regardless of what you see. Right? It could be BTC, it could be ETH, it could be SOL. If you want to be very simple about it, I think BTC is like your clearest PVE coin, because you're not even counting on like retail to buy your bags. This is just the infinite latent bid from TradFi that is coming in, right? So if like I say this and I should be doing it myself, but I'm not at the moment. But if you're ever uncertain or you want to risk off, but you still don't think the cycle is topped, just denominate in BTC, right? I think that's one way to save yourself from underperforming the market, which is one of the concerns. And the second one is, don't lose the ability to dream. I think when you're too focused on trying to survive, you forget how wonderful the dream is, right? You speak to first cyclists, or I guess when they do come, you realize that you look at their innocence and their naiveness, and you're like, oh, these guys are going to get fucked. But actually, no. It is that naiveness and stupidity that allows them to 50x their net worths as you cope on the sideline with a measly 3x. So that is what I always tell myself. And I always try and dream as big as I can, because I know that was what allowed me to be successful in the first cycle. I think the challenge is being able to remember that when all is said and done and when the music stops, this is all speculative garbage for the most part. And you're supposed to take your money and run. No, I was just going to say, I think it's, especially if this is your second cycle, I think it's really important to remember, if you did have any big wins in the first cycle, to remember how you made those wins. What train of thought allowed you to make those decisions? And how can you position yourself now such that you're able to make those decisions again if the opportunity presents itself? And I think this is really important, because if you're in the mindset of, like, for example, just for a personal example, last cycle, there was a point in time I had 80% of my net worth denominated in AVAX tokens. And that is absolutely ludicrous if you think about it from a net neutral basis. Like, I would sell things into AVAX as the store of value. And that's how ridiculous it is. But that was what allowed me to compound at such a ridiculous rate in certain parts of the cycle. And I look back at that and I say now, because I think the market is pretty similar, can I today be able to do that again? I think it's really important. Maybe because of size constraints or whatever, you find a different asset, but can I do that again? And if you are currently in the mental state of like, okay, I'm going to ape 5% of my net worth into AVAX, or 5% of my net worth into APT, then you're never really going to make the same amount of money that you made in the last cycle, because you're not really taking the same amount of risk that you did, right? It's just that the risk now is just so much more pronounced to you because you're a second cycler. So it's just constant internal struggle of like, how do I make the same decisions as I did when I was naive and stupid, in order to achieve those supernormal returns?
The takeaway here is that back then, when you were just, I'm assuming this is like latter half of 2021, but
Right.
you were like, wow, like AVAX is the future of finance. Suzu's
Yeah.
going to pump my bags. But now we think back to that and say, well, that was ridiculous. But I think we have to be able to study our past and say that, you know what, this is ridiculous and I'm so stupid for doing this, but I am going to put 80% of my portfolio into XYZ coin this cycle, just because I think the risk reward is favorable. If you study the Kelly criterion, if you
Oh, that's a
study,
dangerous one, man.
I know. You can't apply this to crypto and investing,
Yeah.
but the most optimal bet sizing is tends to be really big, right? As long as you have an edge. How do you think about bet sizing, by the way?
I'm always a fan of concentrated bet sizes. I think one of the things that we've been trying to do as PMs at Tangent is really uh, allow the book to express our conviction in certain names. So, like for example, I could be hugely bullish ETH, right? And the book can be long 15% of ETH, right? And every day I have to ask myself, is that commensurate with my conviction in ETH? So a lot of it is a tug of war of fine tuning or perfecting how much of my conviction is correctly translated into sizing on the book, right? So for example, right now, the top 3 positions of Tangent constitute 80% of the book. So right now we're very concentrated in very specific assets, and we're just waiting for the thesis to play out.
Hey, if you're enjoying the video, please like and subscribe. I don't run YouTube ads or have sponsors on this channel, so I'd really appreciate your support. With more views, I'll be able to get better guests so I can continue delivering this high quality content. Thanks and enjoy the rest of the video.
I do want to share this post that I saw on Twitter. Don't have much in the bank account, had $1 million in Binance, lost everything, feels really bad. But as someone that, ran it up huge and then, just experienced huge drawdowns, how do you bounce back mentally from events like this?
If you read the Market Wizards, the TradFi version, pretty much all the big traders have had big blowups early in their career. It's just a matter of when it is and how it's done. So I think that there's actually a pretty high correlation with having blown up a few times and being plus EV. It's simply a misestimation of how high the EV is relative to the risk of ruin. So risk of ruin is something that is harder to price on a daily basis, because whenever the day doesn't happen, then you're like, oh, it doesn't matter, right? So I think that know that it's part of your journey, I think, and also know that it's not a big deal at the end of the day, right? If you think about simply Jesse Livermore, he made and lost $1 billion 3 times. So it's not a big deal, right? You just do it 10 times if you want. You can do it 100 times. But the thing is, the key is to learn from each time and then make sure you don't get greedy and try to win back your losses fast, and regroup, figure out what you did wrong, figure out if your process is wrong. I know traders where they'll have someone monitor their account. If it draws down too much, they lock them out. That actually is a good practice if you find that tilt is the main problem for you. I used to work at a prop trading firm in Singapore, and a sister firm nearby, they would turn off your computer if you drew down $2,000. The computer would just shut down. The positions would get auto closed, and then you'd be sent home. And it sounds stupid, but that's how you risk manage 100 traders in an arcade. You just say, look, I don't care what your reason is, but you lost money, so you're obviously not doing well that day, so go home. Think about it and come back tomorrow. So, obviously trading with that kind of a risk limit, you actually will have a lot more discipline, because you're like, okay, am I actually trading the best setups? Do I know what I'm doing? Am I just gambling? Am I just speculating? So I think that, if you're someone who takes a lot of positions, and you don't quite size them properly to your risk, having that kind of drawdown experience is actually really useful for saying, okay, what is your actual alpha? How do you harness and finesse that alpha and not, let it creep into all sorts of other things? I think that there's a tendency to treat trading as a sport, which I think is the right way to think about it. It's less so of a game, actually. I think to think of it as a game is actually a mistake, because yes, it's a game, but if you believe it's just a game, you won't take it as seriously as you should. Whereas if you think of it as a sport, you know, think about it as something that you're continuously getting better or worse at, based on what's happening. That requires your mental focus as well, and requires your physical focus. I think that making like a game implies that you can just lose the game, press restart button, and play again, right? Or you just like reload, like GG reload, but or respawn. Whereas like you can't actually do that. So I think um you know, kind of balance it in a way that you can learn from mistakes. You can risk manage appropriately. I think that that's really important. But at the same time, like assuming you do end up blowing up, a big account, uh, I've known so many people in crypto who've ground back from like losing like 90% plus. Like I know at least 100, I think. So that's part of the beauty of crypto, which is that it just takes one, or especially at smaller sizes, it just takes one or two big ideas to make it all back. And actually, it's like the hard times make tough men thing. It's like, having had that, you're supposed to then, grind the trenches. I mean, how many posts have we seen like last couple of months ago where it's like, I lost it all on FTX, everything went illiquid. I couldn't get any access, but then I made it, I've regained my FTX highs and more. And it's like, maybe they're farming airdrops by following guys like you, or maybe they're, doing other things, but like, there's just so many opportunities. It's actually kind of insane. And so I think that, if you focus more like, oh gosh, like, I can't do it anymore, I can't do it again. I mean, it's quite defeatist because you also know that other people have done it, right? Like, in fact, if you know how to do it once, it's much easier the second time, because it's like think of it like a road that you've gone down and you've seen it, and you come back again, like, roughly how the road goes. Maybe like there's branches, that have fallen, trees that have fallen, but roughly what it looks like to do that. So, um, and think of it as like a challenge, right? At that point, where it's like, okay, let's do it again.
Like, what are some trading and investing rules that you live by?
I think the biggest is to try to ask yourself, what is like, why might I be wrong? And try to write those down and look at them every day. Paul Tudor Jones had a fantastic quote that, I should do more of, and all traders should do more of, which is that every day you mark your book at the last price. You don't ever think like, oh, I wish I sold higher, or I wish this or that. You just say, why am I owning it at today's price? Not at yesterday's price, and not at the price you bought it, but today's price. Having that humility and that discipline is really important. I think also, being really open-minded, stay open-minded, know that like, I had the tweet which went viral, which is like, don't focus on the bags that you fumbled in the past. The ones you're fumbling now are just as big, if not bigger. Right. And it's,
Yeah.
every OG will tell you that it's literally true. But then a lot of like, not like just newer people in crypto, they're like, no, I fumbled so hard already, I'll never make it back. And it's like, no, watch as you fumble yet more bags every day. Right.
Yeah.
So, because when you've been around long enough, you would have fumbled like ETH ICO, EOS ICO, Tron ICO, BNB ICO. I mean, I can go on. I can list 100 fumbles that you could have made, all of which could have made you like 8 figures, right? I
Yeah.
can name you more fumbles than you probably even know trades that could have made money, like that like big
Yeah.
money. So that's like the thing that, I mean, it requires you to be full time in crypto to be like having that perspective. And most people are not full time in crypto, right? So they're gonna be like, if they somehow manage to, let's say, buy Olympus at like very, very early days and they fumble that, it's going to feel like, well, I'm never going to get it again, because like, how did I even manage to do it? Maybe some friend told me, right? But for full time, if you commit to the game, if you commit to crypto, then yeah, it's like, that is very, very common to like, there's just so many fumbles like we're doing right now, even like, just to have like a podcast, you're already fumbling
I
huge
know.
bags somewhere. Right. That's why we got to end it soon. It's just fumble nonstop. But no, it's like, it's just literally, it's incredibly difficult to overstate how fast moving the market is.
This is purely by coincidence, but this was filmed literally 2 years ago. We're recording this on the 29th. And I think it's a good time to revisit this video, which, I mean, the video title was Understanding Crypto Ponzi's and Yield Farms at Jordi. You mentioned that the ultimate question of the crypto universe, or the answer to the ultimate question, is -4 + 2. So this is obviously referring to the 3-3 meme that Ohm had. But can you kind of go over this -4 +2 meme?
Yeah, this is kind of the most important thing to understand when you're in the crypto markets. It feels like at times there's amazing social coordination, right? Like everyone's putting their money in the same coin, everyone's getting rich, money, is just kind of forming out of thin air. And it feels like you just have this 3-3 is this concept that everyone's better off. And you just coordinate and everybody kind of keeps the line and somehow this magical thing happens. So obviously and you can start taking more shots now. From a first principles perspective, you can't just create money out of thin air, right? Yes, the space is growing. So there is a certain amount of wealth transfer happening from outside crypto to inside crypto. And, you see that obviously with things like this, Bitcoin kind of macro thesis and maybe some of the other kind of L1s that are interesting to outsiders. But for coins like Ohm and, most of the things that are going on, especially in the short term, there's a lot of, just like hot money rotation, and understanding that the game is actually -4 +2 means that there is a winner, they're making +2. And then there's somebody else on the other side that's losing even more than that person's winning, because it's not even zero sum, it's negative sum, because you have all these costs, people have to pay for the AWS servers and for the employees of all these crypto exchanges doing, customer service and everything else. There's a ton of costs that are ultimately making it net negative for a lot of the activity going on. So yeah, WAGMI, all this kind of stuff. But the reality is, someone is going to be doing better. And that usually is either they have a structural advantage, because, they're the one creating the Ponzi. They have all the tokens, or they're the one kind of closest to the source of wealth. Or they're just really good at playing these games. They're the kind of Phil Ivies of crypto. And unfortunately, sometimes it's worse than that. It's like either the hackers or it's the scammers that end up kind of doing the +2 while everybody else is doing the -4.
The first law of thermoponzinomics: the amount of money in an isolated system can be redistributed in a PvP fashion, but can't grow more than the amount that is put in. So when I read this, I kind of think about these illiquid meme coins where let's say the market cap is $1 million and someone buys $10,000 worth of this meme coin and the market cap jumps to 2 million. I mean, technically all the holders are up 2x, but there's only $10,000 worth of additional liquidity to enter the system. So if people want to leave the system, then they have to destroy the price, paint the charts, pay gas, pay slippage, and all this fake internet wealth, I guess in crypto, isn't real wealth unless you actually realize it.
Yeah, that's well said. I think the key question is who's willing to buy in, for how much are they willing to buy? And I think I had made the point in this old article that usually the loss of wealth is hiding in illiquidity. Like there might be somebody willing to buy a little bit, but as soon as it kind of cracks through, there's nobody there. And so that's kind of where the mark to market on people's portfolio is hiding. And it might look like there's liquidity, but if everyone's rushing for the door at the same time, that's going to quickly disappear. And we've seen that time and time and time again. And the one thing that I've learned, recently is that one of the strongest gambling impulses that people seem to be very addicted to is this sort of path where, bust a bit. It's this very very famous game, even a crypto game, where you kind of you have something that just keeps going, keeps making, and then it's suddenly goes to zero. And then people can kind of bet, do they think it's going to get past this point or that point? And depending on how risky they want to bet, they can. So this bust a bit concept is not just a niche game that, it's done with sats on Bitcoin, but it's something that permeates the entire crypto space so deeply, where it's like Luna, right? It's going to keep going up and then it's just going to go to zero. and you have these like very skewed probability distributions where you will make money and you will make more money, and it kind of feeds the greed, and then the reversion is so sudden, and it's very prevalent. So people, I think, their dopamine receptors are not used to dealing with bust a bit. Is kind of like the lesson.
Yeah, and when you mentioned that, it kind of reminds me of this, and this is something that I think Nassim Taleb introduced. It's 1,001 days in the life of a Thanksgiving turkey, where the well-being of a turkey is up only, and then it's Thanksgiving and it goes to zero. This is kind of like a lot of crypto coins without any. I mean, not all crypto coins, obviously, but if there's like some meme coin or some random thing that's being shilled, it might seem amazing, and then all it takes is 10 dudes selling and then it's over. Like it's like the harsh reality of crypto trading, I guess.
Yeah, you have two shapes. You have like this one, and then you have the one that Light Crypto has on his profile, where you get this like downward spiral, but in circles, where it keeps tricking people that it's not over, but then it's kind of downward spiraling, and it is over. So those are the two ways that Ponzi's die.
And I think this little shape here, that light, a thread on Altland, it's like one narrative pumps really hard, and then everyone is like, oh, like Solana's up a lot, let's punt other alto ones, and then each subsequent pump is tinier and tinier. And I'm not trying to use Solana as an example, but just generally, it's like something pumps, and then everyone just tries to chase a laggard, and then these subsequent pumps just get smaller and smaller, and then at some point, the liquidity is fragmented across all these coins. And if Bitcoin sneezes 5%, the entire trend is over. It reminds me of the shitcoin dilemma that you posted, where if Bitcoin goes up, then everyone just punts shitcoins. But if everyone punts shitcoins, then there's no one buying Bitcoin. So when Bitcoin goes down, everything just nukes 30%. Is this kind of, yeah, like how do you think about, I guess, these like rotations? Do you think it's
Yeah, I
healthy?
mean, I would say like it's two separate things. So one is just like for the same coin, it'll have like a hype cycle. It'll go up, and then Bonk is like one good example where kind of gets the listings and it gets everything, and it kind of like reaches this all-time high, and then it goes back down, and then like you're like, oh, like maybe there's still life in this. It's part two, but it doesn't really kind of match it, and then you've seen this with Pepe, you've seen this with like all kinds of coins like Dogecoin and stuff. So a lot of like the I hate using the word fundamentals, but like the fundamentally based coins will have that shape. It's not an illusion. The amount of like difficulty and the amount of effort that it takes to create something, that will cap like how much something is worth. Like if it's so easy to spin up a new ERC20 token and just like, give it some funny name, and like people can just make thousands of them. At some point, like that supply, like you said, will appear and kind of like, make things efficient. And the things that ultimately will last a long time are the ones that are really hard to build. They're technically very hard, or it requires some, unique combination of pieces that takes a lot of skill and a lot of effort to build. Those things will last.
I think in the past podcast, you said, or you discussed this analogy of being like a bank robber when it comes to crypto hype cycles. Can you kind of explain that to our audience?
These boom bust cycles are kind of like robbing a bank, right? And when everything's good, like you've walked in the bank has infinite assets and infinite money that you can, take and line your pockets with. The problem is when you are robbing the bank, the silent alarm trips. So the whole game is to take as much as you can and leave before the police show up. Of course, the boldest and bravest bank robbers, are going to leave with the most loot, right? But if you're too bold and too brave and not sensible enough to know when enough is enough, and when things have gotten heated, you're going to get busted and you're going to leave with nothing. So I really did like that analogy. We're robbing the bank right now. It's just an analogy for the cycle itself. When is this going to be over? The answer to that is who fucking knows, I mean, every time like the signs of froth are different.
While I was collecting audience questions, Mr. Frack here asked, how would you make it this cycle if you were currently sitting on a mid 5-figure portfolio? And of course, the size doesn't matter that much. It's more this concept of, there's a bunch of, thousands of retail watching this probably. And, we all want to make it. How would you advise them? Like, what should they do if they
There's
want?
really, I think, two paths to making it. And, one of those paths is you can get in the meme coin trenches. I think that's an honorable path. I think that's the difficult path. I think to be very successful in the meme coin trenches, a lot of times you do have to be an insider. You have to know the right people. You really have to have your finger on the pulse and your ear to the ground. It's very stressful. You go through wild, volatility swings. The tried and true classic way of leveling up from that amount of capital is to find a gem. People say, what do you define as a gem? Does it have to be under $1 million market cap? Does it have to be under 5? There's no like strict, criteria for, being a gem. When somebody says gem, it essentially just means like something that's undiscovered, something that when polished, will end up being a lot prettier than it looks now. The tried and true way of making it, and in my opinion, the low stress way of making it, is to find something that people aren't looking at yet with a low enough market cap to where it doesn't take a lot of capital to pump it, identify why it's going to go up, what are those growth catalysts? What are the narratives that are going to bring attention this way? Because at the end of the day, the numbers go up on anything because more eyeballs are on it, right? But what is going to bring the eyeballs? And go all in,
All in.
yeah, having a diversified portfolio with a small amount of capital is not a good idea. I find a gem, maybe it's $8 million cap like Spell. I considered that to be a gem at the time. Of course, I had no idea, like, let's be real, that Spell was going to pump as hard as it did. Like, I'm not this oracle. I didn't foresee that at all. It just happened. Right place in the right time. But find something like that. Be a really good community member. You want to be that guy that's in the Discord and the Telegram helping, when new people come in. The devs aren't always around. The community managers aren't always around, but you can have a lot of knowledge and education on what you've invested in. I think that's always a good idea. And you can be the guy that helps to onboard new people to the community. I always advise working for your backs. So go find a gym that you truly believe in. And that's why I still Midcurve my portfolio. Anything in my portfolio is something I actually have done a lot of research in, and I see like a really distinct possibility of it growing. There's a reason I'm in it and I believe it. And the problem is if you don't truly believe in what you're holding, it's very difficult to buy the bottom and sell the top. It's very likely if you buy something, you're going to, experience some kind of drawdown. And it might not happen immediately, but it's going to happen. Do you believe in it enough to continue holding it for your grand vision of whatever you bought? That's why I can't buy meme coins, because I don't believe in these meme coins. I can't. And I understand that meme coins have outperformed absolutely everything. Anybody with eyeballs can see that, right? But for me personally, Messi and meme coins doesn't outperform absolutely everything because I would paper hand everything because I do not believe in these bags. Okay. But it's not what I know. It's not what I'm good at. It's not what I'm comfortable with. It's not what I'm familiar with. Stay in your lane. If you are the meme coin guy, and you're doing well, shit, keep doing it, man. Like keep growing, keep learning more, be an expert in your own field. I'm just not that guy. So for me, and especially other people's listening that are still trying to find out what is my identity? What kind of investor am I? That sort of thing. You do what I said, all in a bag, be a good community member, watch it grow, shoot it to the bull cycle. Everything's going to pump, right? If you pick, even okay, you're probably going to make money. If you just have the courage to sit on your fucking hands, and you can't do that if you don't believe.
If you can just give advice to your younger self, this can be, last cycle or 2017, but just generally, what kind of advice would you give Messi like 5 years ago, let's say?
That's See that's kind of like a really difficult question to answer because, I am who I am today as a as a byproduct of,
Yeah.
all of the wrong turns that I've made. You know, I don't know that I would tell myself anything because who knows, you know, how that would alter the timeline. I don't regret anything. I've been through a lot of amazing moments over the last 10 years, and I've also suffered a lot. If you've ever had that experience, that feeling that you're gonna make it and it's so close, you can almost touch it. And making it is so, subjective. Like making it just means that this crypto shit has made a material impact and difference on your life. People think making it means that you have an Audemars watch now or a Patek. Or you drive a Ferrari, you live, in a mansion, or you got a yacht, or you're flying private now. Like that's bullshit. Making it literally just means like you changed your life in a way that's meaningful that you can see. Maybe that's filling your gas tank up. Maybe that's going to the grocery store and you get to the checkout and the lady tells you that'll be $350 and you don't go, like what am I putting back? Like I do think, while I would just let myself just fuck up and learn as much as possible. And being as stubborn as I am, that's the only way I learn is a lot of fucking up. Um, for anybody else listening to this, like just if you have the opportunity to change your real life, do it. You'll never, ever, ever regret it. Ever. Crypto's a butthole. Exit only. Never put money, never put money in crypto. Only take money out of crypto. Never, ever, ever put money back in crypto that you have taken out. Once you've taken out, that's real money. Real money does not go in crypto. If you take the money out, don't put it back in. What you said earlier is just great advice. And I think the spirit of what you said was like, you're only competing against yourself. And in order to perform at your best, you really have to get in that mindset and have that mentality. Play the game as well as you can. Don't worry about other people's games. Who gives a fuck what they're doing? You do you and you do it as, to the best of your abilities. And also I've always had a really, really strong work ethic, and work drive and a provider drive. If you do want to succeed here, once again, the people that are the most successful, and I think most would say this, have worked their asses off. I have worked my ass off every day, 7 days a week, no vacation for 10 plus years. Okay. And I'll continue to do so. I have more free time now, and I try to spend time with my family and my daughter, but I work my ass off even to this day to be the best player of this game I can possibly be. You're not going to make it if you don't work your ass off. And if you aren't working your ass off now, the good news for you is there's still time in this cycle for you to start working your ass off. And that means if you don't put in the work, if you don't make the sacrifices, that might mean you're not getting fucked up with your buddies on the weekend anymore. But in the grand scheme of things, it doesn't matter because you need to start thinking about what your future self in 5 years is going to look back and think of you now, and is he going to appreciate, the things you're doing now and the sacrifices you're making now? Or is he going to be in the same place you're in now and be like, hey, fuck you, dude. If I had just started working my ass off 5 years ago, I'd be in a totally different place than I am now. If you're young and you're listening to this, you could do it, put the party shit behind you, put your fucking video games down, get serious about this. This is work. This can change your life, but it's a lot of work. Start working and start working hard.
Thanks for watching, and I hope you enjoyed the content. If you want more free content around crypto, DeFi, and on-chain farming, please check out the link in the description below for our free newsletter. Also, I run a premium community called the Humble Farmer Army, so if you're interested in that, I will also put the link in the description below. Thanks for watching, and see you guys next time. Bye-bye.